This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial market. Now, this video is a weekly review video, but I had a hectic weekend. I flew back into town, back to Houston, spent time with my family. It was my grandparents' 60th anniversary, but flew back to New Mexico. Now, here I am able to make this video, finally. But it's kind of cool. I moved to a new state, and now I'm just hopping around the map. Like, literally, think of it that way. You are hopping around the map. So if you're feeling stuck in your current position or where you're at, wherever you live, then I definitely urge you to just go out and move somewhere new. Move to a different city, because that's a huge change in your life that I guarantee will make you uncomfortable, and you will grow as a result. So moving to a new state, it's extremely eye-opening. Definitely recommend it if you feel like you're stuck. And I'm wearing a polo, of course. If you've been keeping up with the channel, you know that I took a job at the BMW dealership, and that's already taken the pressure off of trading. I'm just really not caring about my performance at all, just showing up and doing the things that I need to do. So we got the first day fit on. We got the polo, we got the tuck, we got the belt, and it's day one. So I'm gonna go in today. I'm gonna get onboarded and all that shit. I don't really know how it goes. I've never had a job before, but we're doing it. We're trying new things. We're doing the inverse of what has not worked the last 2.5 years. The last 2.5 years, I have refused to do anything but trading. And it's gotten me to this point here where I do have a funded account, and I'm $1,200 in drawdown, but I still have not made a single dollar from trading. And I believe that taking this job it's already helping. I mean, look at the way that I traded last week. This is the weekly review, right? So let's get into it. So date range, we will do the 6th through the 10th, and then look at how I performed last week. Is that the wrong dates? That is the wrong dates. Okay. Let's go to November. It's November 10th through the 14th. Okay. I'm tripping. There we go. All right, cool. This is last week's performance. The first thing that I'm doing when I'm doing a weekly review is I'm looking at the baseline statistics up here, and this just gives me a good indication of how I performed for that week. So obviously net P&L $154.28. It's really nothing. I didn't really make a dent at the drawdown at all. Let me toggle this off real quick. You can see that, boom, $1,200 drawdown over the course of about half a month, a couple of weeks, and now slowly piecing my way at that drawdown and getting myself out of it. So down from an equity low of $1,600.83. $1,600, now up to $1,200. So not bad, slowly working my way out of it. And last week, we did not add to the drawdown at all. I did not have one losing trade. I'm going into the market now, and I believe this is because of the job. Like, the job is absolutely taking pressure off of my trading. But I'm going into the market, and if the day that I know that I'm not going to trade because it's not optimal for my edge, I know that my edge is not likely to present itself, it's just not the right market criteria, not the right market condition, then I'm not going to do anything. I'm just going to go to work, literally. And I'm very, very patient and very, very selective, very careful with the day that I'm trading, if that's a good trading day or not, and very selective when I am putting risk behind a setup. And this is the outcome. So I had a solid trading day on Tuesday. Wednesday was all right. I should have had a solid winning trade, but I was just not confident in my execution. Repeated a problem that I've been repeating for the last over a month now, probably even the last 3 months now. So we'll get into that. And then Thursday, I had a $400 trade that came back on me for break even, which was extremely frustrated, but I believe I handled the situation very well. So let's get into it. Again, Monday, no trades taken. Monday, and let's just go on a day-by-day basis. So, actually, we'll pull up the weekly review. So, November 10th to the 14th, net P&L $154.28. Again, first thing I'm looking at is performance stats, right? This gives me a baseline of how I did for the week. Red flags. Despite the 100% win rate, I still didn't make anything, which is true. $154, I barely even cut in at the drawdown at all. So, I'm getting the bias correct. I'm forming solid trade plans, but still not yet capitalizing on them. And this has kind of been the theme of my trading for the past month, maybe 2 months now, where I'm getting very, very solid at bias. I wouldn't say I'm getting comfortable with my model, because if I was, this P&L would be a completely different story. but I'm comfortable with my read on the market. I'm comfortable with the approach that I take when I come to the market on a daily basis. Like I'm doing the same thing day in and day out, and it's producing solid trade ideas and solid trade plans. I have really, really solid plays. NASDAQ plays, I got them. They're down, and they repeat, and they happen over and over and over again. Just one way or another, I'm not able to capitalize on that. So I wouldn't say I'm at the point where I'm extremely, extremely comfortable with my model, because if I was, the net P&L would be a different story, right? But we're working there. And I know that I only get better over time, which is the best part about it. I literally only improve over time. So I'm only going to get better at executing this model that I've created, and my net P&L will eventually reflect that. Obviously, it's going to take some time, but I got time. That's another change that I'm taking mentally. I have time, bro. I am 21 years old. My life is literally just starting. Like, what is the rush? And that's, again, doing the inverse of what has not worked the last 2.5 years. The last 2.5 years, I've rushed everything. I've came to the market every single day wanting to make money right now, wanting to make trading work for me right now so that I could pay myself, so I can feed myself, so I can finally start living the life that I want to live and achieve my freedom, right? Ultimately, that's the end goal. That's what we all want from this, from trading. We want our freedom. We want to be able to be our own boss, work on our own time, and just, for me, it would be providing for the people around me, but just being on your own time and not being physically bound to anything, not having to report to anybody or listen to anybody. It's just you, and what you do, you've got it, and it works. And I believe that's going to be such a good feeling once I've arrived there, and I'm getting very, very close. So positives, trade frequency has dropped. Why? Because I'm trading at ease. There's no pressure because I'm taking this job, and I'm accepting I got time and I'm going slow, what I just talked about. This has made me very selective and patient, and I'm no longer trying to make something out of every session. My 100% win rate reflects the change in behavior. Something has changed, and I am not trading the same. Again, 3 trading days and 3 trades. I really, really, really like going to the market and only taking 1 trade that session. It makes me feel good. And if we look at what we've done previously, or what I've done previously, if I toggle on the evaluation, see how I performed with the evaluation. If you look at last month, I only had 1 red day where I took 1 trade. That's it. Aside from that, everything else was 2 trades. So when I have a red day, I'm typically stacking 2 losses, and I'm walking away with quite a bit of drawdown. I'm starting to curb that now, and you can see that. 1 trade, 1 trade, 1 trade, 1 trade, 1 trade, 1 trade. For the last 6 sessions, I've taken 1 trade. So something has changed, and I am not trading the same, and it's for the better. Buyer's accuracy, I got 1 out of 4 days incorrect, which was the 12th. I got the 12th incorrect. But aside from that, lessons from buy this week. Things that are changing a lot. Here's one thing that I did this week that really, really helped with my bias, and maybe this could help you guys out as well. So the first thing that I do when I come to the market is I ask myself, how am I feeling? I'm just thinking in terms of like, how is my energy? Is there anything outside of the market that could impact the way that I trade today? But recently I've been using it to lay out potential scenarios that could play out for this daily range. I'll look at the example for the market going higher, and I'll look at an example for the market going lower, and just lay out the possible scenarios, because that's all trading is, right? It's literally a game of probabilities. We're looking at the market, we're thinking of a series of outcomes. Okay, this could happen, this could happen, this could happen, this could happen. But I think that this is the one that's most probable and what is most likely to occur today, what's most likely to play out today. So I'm coming to the market, laying out those 2 ideas, and then seeing which one makes more sense based on the higher time frame narrative and market criteria that we have from the overnight and pre-market session. And that has helped me form bias this week. So this week took huge leaps in my understanding of bias, and that's just simply from the fact that I'm ringing in the higher time frame narrative and laying out these 2 potential scenarios. So I lay out 2 possible scenarios that I could paint for the day, and I go with the one that makes the most sense based on higher time frame narrative. And this has helped a lot. So I am consistently getting around a 75% accuracy on bias correct. Like I'm forming trade plans, and they are playing out 75% of the time. That's more than half the time. Like I'm getting really, really, really good at market approach. I'm getting really good with my read on the NASDAQ in particular. I'm a specialist. I'm only trading the NASDAQ. I don't care about anything else. I know that I can feed myself from the NASDAQ alone. If I get really, really good at this market and just focus on one market, then I know I can do very, very well. And I've got to a point where I really understand this market, and now I'm coming to the market, and my trade plans are playing out 75% of the time. And that's because I'm doing this work here week after week reflecting on my bias throughout the week, throughout every single trading day, and then taking away the lessons that I learned from bias. So I just continuously improve on bias. My trade plans keep getting better and better, which is why I'm getting really, really good at understanding this market. So another lesson, it's taking into account what price is done overnight in pre-market, then wrapping it around the higher time frame narrative. What order flow is going into the open, where liquidity rests, and where we open on that day. You wrap that around the higher time frame narrative. And I learned that if market criteria does not align with the higher time frame narrative, that's an indication of a potential counter trend move / reversal. And then again, this is something that I learned from an ICT lecture. And I will always be for continuous learning. Now, I know that I'm at a point where my market understanding is very, very solid and I don't have to watch a single ICT lecture ever again. But I choose to do so because I continuously pick up on new things and more things start to click for me. So you can literally use daily PD arrays for bias and how the market trades around them. And I'll explain how I got the bias correct on Thursday doing that. So this is the daily time frame. We can see we have this daily volume imbalance, right? How the market trades around the daily volume imbalance on the lower time frame tells me that Thursday was likely to be bearish, and I get the bias correct as a result. Because if we look at the bodies of the candles, they are refusing to leave the daily volume imbalance. And we can see that Wednesday has this large premium wick that pokes up and takes Monday and Tuesday's high, and then closes lower inside the daily volume imbalance. And then if we look at the 4 hour, what do we see? Well, initially, here, the bodies of the candles are closing above the midpoint of the daily volume imbalance, right? And then we start to move away from that. Now, at this point in time, if the market was bullish, what it should do is leave the gap and never trade back down to the midpoint. You'd want to see it stay in the upper half. And preferably, never trade back down to the midpoint because we've already colored in the lower half of the daily volume imbalance many times, so it'd have to get up and leave. But it doesn't do that. It fails to leave it, and it lays a body over the midpoint again on the 4 hour. Then the following candle opens, we can see that we trade up and we reject the midpoint. And then we close lower, and this ended up being a large down close candle. So the fact that it's not leaving that gap and the fact that it traded back below the midpoint like we see here, and now look at the bodies of this is an hourly now. Now look at the bodies of the candles are closing on the hourly, closing below consequent encroachment of the daily volume imbalance. And then the subsequent reaction, large down candle comes in, right? That is not bullish at all. That is extremely bearish. So how the market is trading around these daily PD arrays tells us what the bias is for the day. And I picked that up from the recent ICT lecture. So there you go. Performance review. Least performing playbook. I have none because I took no losing trades this week. I'm not saying that to be egotistical. I'm just really focused on protecting my downside right now, especially since I'm still in drawdown, right? Now, from here on out, I think I'm just going to go on a day-by-day basis. Monday. What happened Monday? Now, get this. I can sit here and tell you what happened every single trading day and what I learned from that trading day as a result, because I'm doing this daily process that I've created inside of TradeZilla. Everything is integrated into one system. It's extremely efficient. I don't see any other YouTuber that trades doing this. I mean, you see these big influencers and they tell you, "Oh, look, this is the trade that I took." They don't show you the process that they followed to get to that point. But here it is. It's extremely clean, extremely efficient, from pre-market, my market approach, to intraday, to post-market, and then the post-market review. And then this is just what I do day in and day out, and I get better by default by doing this process, which is why I show you guys this process in every single video. It's not hard. It doesn't take me long at all. It takes me half an hour, if even, to do this. And this is the data that you need. This is the data that tells you where you're going wrong, where you're going right, and how you can improve as a result. Let's see what time it is. It's 9:27. Okay, I should be wrapping this video up soon because I got to go to work at 10. It's crazy, bro. I've never clocked in before. This shit's crazy to me. But anyways, Monday I used as an example to demonstrate trade selection and setup selection, because if we look at the lower time frame, let's just go to a 15-minute. We can see that we have a new week opening gap that's still inefficient, so that's a reason for the market to want to go lower to rebalance that gap. We have a large gap up opening. Here's previous day settlement, and 9:30 is going to open somewhere around here, right? This is pre-market at 9:21. So we're going to have a huge gap up opening and smooth the sell side from the overnight session. Now, typically, When I see the market present this criteria, I'm looking for a gap fill. I'm looking for my bearish premium gap opening setup, where we have a premium gap opening, market opens near the high day, it trades up, fails, and then fills the gap. But in this case, I'm not looking for that. I am showing trade selection and setup selection to sit out this potential example of that playbook because the higher time frame narrative does not agree. Why does the higher time frame narrative not agree? Because if we go to the daily, what have we done on the daily? This is Friday. This is the previous day's range. Look at what it's done. It's traded down. It's cleared an old daily low, and it's closed above the previous daily low with this huge discount wick. That is not bearish at all. So I'm not expecting Monday's daily range to be a down close candle at all. So I'm not looking to be a seller at all. So I use this as an instance of setup selection, and it works. I did nothing because I know this is not an optimal day for my trade model. We have this huge gap up opening, and I think we're just going to keep going higher. I don't do anything. So that was perfect. Tuesday. Now, go to the 15-minute time frame on Tuesday. What we have done Tuesday in the overnight session, note how we've already taken previous daily high, and then we have produced new bearish order flow from there that is respected. This is the hourly time frame now. Hourly SIBI created and respected after a run-on previous daily high. Bearish order block also respected. Now we're opening here. The huge new week opening gap that's left inefficient from Monday, and I'm not thinking that the market's going to want to go higher without rebalancing this range. Especially with the fact that we're opening off of sell side, we can see this low, this low. This low pokes below this low, so it's not necessarily the highest probability relative equal low that you could find. But what was I looking for? I was looking for... Again, I can go back and literally look at this is exactly what I was looking for. I wanted to see price stay heavy at 9:30, clear the PM low with a solid down candle in the 1 minute and the 5 minute to indicate a break lower. So again, tying in higher time frame narrative and market criteria. My bias for the week was bullish, but I was looking at a potential Wednesday low of week to then go higher because of how Monday traded. Because of how Monday had this huge new week opening gap and then just kept trading in that direction. And then how the market ended up playing out there. I missed the post-market analysis here. I still have to go back and do this. This is a part of the process that I left out, but this is typically what I do on a day-to-day basis, right? I'm going back at the end of the session and doing this. So Tuesday ended up being a solid day. Caught the short. Again, where am I selling? I'm literally selling basically the high day. Selling these up candles. Why? Because 1, 2 removes buy side liquidity. Displacement down, sell, stop loss, and it plays out. There you go. Wednesday. Just going to run through these days real quick because I don't have much time left. Wednesday. Basically a break-even day. Now this was also a very, very important day for me because I learned an emotional trigger. Wednesday and Thursday, I learned 2 emotional triggers that affect me. In this case, I missed a fill. I missed the optimal entry. Let's go to a 1 minute time frame. Okay. So again, Wednesday we had a break lower. I was very, very suspicious about the bias on Wednesday because the higher time frame narrative in my eyes was still bullish, but the market criteria did not agree with that because we have this original consolidation in the Asia session. Then we rally up. We take previous daily high. Now we start to see the formation of an intermediate term high. So what I was thinking was the market would potentially reprice higher first. Then break down, reprice higher first for the stacked highs in the daily SIBI. If we go up to the 4 hour, right, we have that daily gap there. I was thinking the market wants to reach up into that first, clear the buy side, and then go lower. So I was looking for a potential buying opportunity to take it there, or if it got there first without providing me buying opportunity, then I would look to sell it. Those are the 2 plans that I had laid out. So I basically got the bias incorrect because we did not make a higher high than this, and the market broke lower right at 9:30. But I read the 9:30 sell. I read the break lower at 9:30, but I was not able to confidently execute on it. And that's what led to me eventually chasing the market. But again, from the Asia session, original consolidation. Does this look like a low day to you? Does this look like a low day to you? Think about how that daily candle is painting through the lens of the 50-minute time frame. What have we done so far where the market's opened here in the Asia session and we've just traded up and we've taken previous daily high? And then if we look below the market price, what do we see? Low, low, relatively equal. In the Asia session, original consolidation, rally up into previous daily high. This does not look like a solid low day for me. And look at all the relative equal lows down here as well. So again, this criteria has me suspicious of potential market maker sell model that I think won't unfold until price delivers the daily civvy and stack highs, what I just explained to you. We ended up getting that break lower right at 930. This led to an emotional trigger. Why? Because the way that I get on side right now is extremely flawed and has led to so many mistakes in the past that I'm just completely cutting it out and I'm done with it. I'm not doing this shit anymore. Large down candle creates a gap. Large down candle creates a gap. This is the 931 candle. This is first presentation. It's laid across the pre-market low. That's indicative of continuation. That's indicative the market is extremely heavy. Instead of just selling this gap, I sat there with my mouse hovering over the sell market button, and I was looking to sell at the market, reacting to the reaction off this gap. So instead of just confidently selling first presentation, I wanted to see the reaction off the gap, then sell it. And this is what leads to the emotional trigger of me missing these moves, me failing to get on side, and then I end up chasing the market. So instead of just selling first presentation, what is the trade that I actually end up taking? So again, here's the missed fill, right? And then I set another fill, right? Another limit order here, never got filled. And then boom, large down candle comes in. I have a sell limit order resting here. I missed this opportunity here. Once this large down candle comes in, I'm thinking, okay, it's not going to go back to this gap right here. We're probably just going to reject this and stay lower. I end up chasing the market and selling the low day right here. But I note the lack of premium sensitivity. I feel my emotions kicking in. It's literally a physical feeling that you can feel in your chest. Like you wear your emotions, you can feel them physically. It's a feeling inside of your chest. That's how you know you're emotional. I'm feeling that at this time. I've missed 2 opportunities. And then eventually I just throw a sell limit order on at the low a day. I bet a lot of retail traders were also doing this. This is true. And I know that this trade is not positioned for a retracement because we've literally just had a straight drop down from the open. And now I'm literally selling at the low a day. So when the market trades up into the gap first and then closes below or starts to leave it, but then it comes back to it, I know that I'm not positioned to weather a retracement, and I know that a retracement is coming, and it's going to stop me out if I don't take this shit off for break even. Now notice the difference in reaction that we see here. Here, we have an institutional order flow entry drill where we trade up into the gap, and then we immediately leave it, and we never come back to it. Here, we have that same initial reaction first where it taps the high of that candle, trades into the gap, and then starts to leave it. It comes back to it. That's not what you want to see. You want to see it reject the gap, leave it, move far away, be gone, goodbye, never come back, stay heavy. The fact that it does come back tells me that that is lacking premium sensitivity, and that gap is not likely to work out. In a low resistance condition, this is what you want to see. This is not what you want to see. So that makes me lack confidence that gap is going to hold up price, and I eventually end up pulling off, taking that trade off for break even. So again, protecting the downside, and that was a really, really good move on my end because I knew the trade was dead. I knew what I did. I knew the mistake that I reacted out of. I knew the emotional trigger, right? And I pulled off early without realizing the loss, knowing the location of this trade is prone to getting stopped in a retracement. There you go. Perfect. Good trade. And that's my only trade of the day. I know I'm emotional. I know I've missed the move, and I just step away. Now, Thursday, last day, and then we'll be done. This bias was extremely spot on because, again, I'm using that daily PD array. I'm noting the respect of premium arrays and the creation of new premium arrays from the overnight pre-market session. We have this pump up in Asia. This is from the Asia session. This creates a buy-side imbalance, sell-side inefficiency, but that fails. So bearish or bullish order flow is failing. Look at what we've done in the weekly range. We still have the new week opening gap inefficient. Wednesday has taken Tuesday's daily high, large down candle, 1 hour CIBI, respected, trading below consequent encroachment daily volume imbalance. I have so many different pieces of information telling me that this thing is going to go lower at 930. And then I'm selling it right at 930. I literally had the perfect entry. Still have to do the post-market analysis on this. But if we look at the trade that I took and what actually ended up happening, could be a really large down day that continues to slip at 930. That's what I'm looking for. And that's what the market delivered. So if we look at the trade that I took, this is 930 right here, I believe. Let's see. 229, what the hell? I gotta change the time on my chart. Go to New York. There we go. Okay, cool. So 930 actually is that candle, and I literally sell the high of the morning session. Right at 930, the first thing that the market does, 930 is this candle right here. First thing that it does is it opens, trades up, takes buy side, rejects that, and I'm selling, boom, like this at the market. That's a good trade. That's exactly what I'm looking for. But where is my take profit order? It's at Monday daily low. So the market comes just shy, 6 points from delivering my take profit. I thought I was just going to, boom, dump right to it, do it one click, quick, clean move, and I'll be in and out. I was on fucking cloud 9, bro. That shit makes you high. It literally makes you high in that moment. But what does it do? Stops just shy of the target, and then boom. Retracement, retracement. I move to break even. It stops me out for break even. Would have never taken my stop loss. It was right here. But I'm not going to let this $400, after being up $300 in profit, I'm not going to let this turn into a loss. I don't know that it's going to come just shy of the 930 high and not take it and then move in my favor. I'm going to protect my downside, right? The thing is I am trading one contract to get out of drawdown, and every time that I have a really, really nice trade and I hold for more and I'm demanding that the market give me the level that I'm looking for, I walk away with nothing. So one of the biggest lessons I learned from this week, very rarely does the market give me what I want when I demand it. 9 out of 10 times when I go for more, I will walk away with nothing. This is why it's so important to be a surgical striker day trading. Pay the fucking trader. And again, learn the huge emotional triggers of mine that has to do with wanting more. When price comes just shy of my target and begins to retrace back inside the range, I get emotional. I feel resentment, start to personify the market, I'll talk to it, then I lead myself down the road of hope. I know the trade is dead, but continue to hold on to it. And I have the opportunity to secure some equity, but I still choose not to. So, emotional triggers, big lessons. Again, still trading one contract, trying to get out of this drawdown. I'll be trading tomorrow, Wednesday, Thursday. I might get to the point where I'm only trading 3 days a week because Fridays are typically ass and Mondays are typically ass. And Tuesday, Wednesdays, and Thursdays are typically good. But let's see where we stand. This is the end of the video now. $1,200 in drawdown, but we're off the equity low of $1,600. So that's good. That's good. So those are the lessons I learned from this week. Hopefully you get some insight into my weekly process, my weekly review process that inspires you to do more in your trading so that you can collect more data and understand yourself better as a trader and improve as a result. I promise you guys, if you do this process, you will literally only get better as a result. And if you're interested in using TradeZella, you can go to the bio of my YouTube channel, and I have a link there. If you use that link, it can help support me. I also have a code for like 20% off, whatever. So definitely recommend using the software system. I mean, everything that I do is in here, and I don't need anything else. It's literally all right here. And I just continue to get better as a result because of this process that I've created inside of TradeZella. So definitely recommend it. Those are the lessons I learned. And I will talk to you guys tomorrow with a daily recap. That's it. So wish me luck on day one of this job. Let's get it.